Hey guys, what is going on? My name is Samesh and welcome back to another video. So in this video, I'm going to break down 3 big market structures and that's it. There's nothing that really exists out there. Everything in the market, every single move that pulls back, everything is within these 3 things. And if you learn this, you'll start looking at things like, oh, this is phase 1, oh, this is phase 2, oh, no, I know what's going on, right? It'll help you in improving your trades a little bit more in detail. Like you'll start looking at your trades, entries and exits a little bit more in detail with this, all right? Let's go. So just know that there's only 3 types of market structures that exist in the universe. There's literally nothing else, all right? Promise you this. There's nothing else that goes on in the market. The first one is impulse, pullback, impulse. I'll break them down in a minute. Second one is impulse, pullback, a little bit impulse, pullback, a little bit impulse, pullback, and then impulse or impulse. And third one is just impulse. All right, let's break them down now. All right, so the first one, impulse, pullback, impulse. How does that work? So if something is pushing, this whole phase of something running from this point to this point is called, what is it called? Yes, you're right, impulse. That's impulse, all right? That's an impulse wave that we are seeing right now. And always there's one thing that will come after impulse, which is a pullback. And this phase is called pullback or phase 2. This is phase 1, this is phase 2. And the third phase that happens after this is impulse again. And this phase is called impulse. All right. Now, this pullback can happen on multiple different spots. This could be a 5-minute chart running and came down to 8 EMA or 9 EMA and bounced. It could be VWAP. It even could be a support level, a strong resistance level turned into a strong support level and a bounce. Right? But always there will be one impulse. If you see something running, that's why we always say do not chase, because if you understand the market structure, if something's pushing, it has to pull back. Right? When it pulls back, that's the spot where you want to enter for best risk to reward. You don't want to enter just anywhere, right? And this is where your entry should be. This could be, as I said, EMAs, VWAPs, support resistance levels. Could be anything, right? Which gives you an edge. Could be anything, right? And this is number first, impulse, pullback, and impulse. Okay. Now let's talk about the second one, which is impulse, pullback, impulse, pullback, little move, pullback, little move, pullback, 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 pullback. Basically, consolidation, right? This usually will happen if you have a strong critical area sitting here. This is a strong resistance point sitting here, and stock makes an impulse move and there is a consolidation. And there are 2 possibilities always that you will see after this, okay? And usually, again, this will have like little wicks on the top and little wicks on the bottom. Yes, to make it more real. But as a macro structure, if you look at the actual structure, impulse, strong critical point, strong resistance sitting on the top, just consolidating. There's 2 ways this can go. The first one is it failed and comes down. And the second one is it breaks and goes higher, okay? So what happened? At the end of the day, we saw impulse again. We saw impulse, consolidation, and then impulse again. Now, where would be your entry on this? That's a question, right? So your entry would be, in this case, your entry would be towards the upside. Your entry should be somewhere around this area. If it breaks somewhere around here and the stop loss below this area, then you catch it. Towards the downside, if it breaks the critical area of this, if it breaks this area, that would be your entry, stop loss right above it, you get it right. But always know, if there's an impulse, whatever's happening, there will be another impulse coming. Can be in either direction. So you need to be switched on. That's why I always say, don't hold your bias. I promise you, market do not care about yours and my feelings. All market cares about is following a certain system of the masses. How masses think, that's how market thinks, because people move the market. Now, the third structure that we see is called impulse. An impulse is not a complete structure, and it's often the most dangerous structure where a lot of beginners lose everything. So what happens in impulse? Let's see. It's just pushing in a straight line, and what happens? Traders try to chase, and literally this is what will happen. So impulse, traders chase, it pulls back. As I said, it will pull back. Market has to pull back. It won't keep going higher, all right? A trader will enter right here. Now what happens? Market pulls back a little bit, and the trader who entered literally at the worst time, what does he do? He goes, oh my God, I'm in so much loss. Let me sell. He entered because he chased, and it was not complete setup yet. It was just complete bullshit. It was impulse wave, just impulse. There was nothing. And we know from the studies that there will be pullback. There has to be some pullback, okay? And he exits here, then he watches the price run. Now what's happening in his brain? He's looking, he's like, oh my God, it's just going. And now he enters at the worst time possible again. What happens? Market pulls back. He does not sell. He thinks, nah, I'm gonna go. Pushes higher, pulls back a little bit more. What's happening here? That's the second one. Impulse, pull back, impulse, pull back, impulse. And now there are two ways, two possibilities how this can work. It can either break to the upside or either break to the downside. And you guys guessed it right. And this time it broke to the downside. And this trader who entered at the worst possible time, he is thinking to take a loss. So if he would have waited for a perfect time to enter here and then catch this impulse consolidation, then switch his trade here, he would have made a bunch of money. Now he lost a bunch of money because he didn't have enough patience. You see where I'm going with this? So 3 structures: impulse, pullback, impulse. Second one, impulse, pullback, impulse, like this little right here. And then 2 possibilities. And the third one, just clean impulse. And we do not trade the clean impulse because there will be a little pullback. Eventually it will come, and that should be your clean entry. Stop trying to outsmart the market structure. It's the wheel's already invented. You don't need to go out there and try to reinvent the wheel. You don't have to. What for? So make sure you follow these 3 whenever you see the market moving, all right? And let me know in the comments down below if you guys like the video. Throw it a thumbs up so it encourages me to make more valuable content for you guys. Subscribe, it really helps. Just letting me know, you know, that okay, I need to help more and more people. And I'll see you guys in the next video. Bye, thank you.